and we are very excited to welcome all of you to the Generator Labs every other Thursday night for our Live At speaker series, where we bring in the best and brightest minds in the world of innovation, in the world of entrepreneurship, in the world of doing things to make the world better. So we're thrilled that you all took some time out of your busy evenings to come and spend time with Doug Redding, who's here with us. We're very honored to have someone of his caliber giving up his free time. He's recently relocated to the Phoenix area, spent the majority of his career in Boston doing very innovative things that he's going to tell you about. So again, welcome. And before I turn it over to Doug, I just wanted to give a quick plug. You're here at the Generator Labs, which is a physical manifestation of our work that we do in entrepreneurship and innovation at the Fulton Schools of Engineering. We also evangelize entrepreneurship and innovation across the entire university. As you can see in our sign, apologize to those of you online. The New American University values entrepreneurship. It's number 3 on the list. So regardless of what your major is, if you're majoring in engineering, we encourage you to demonstrate an entrepreneurial mindset, practice an entrepreneurial mindset, and if you want to do a startup, if you want to launch a venture, if you want to make the world a better place, we've got mentorship, we've got funding, we've got space to help you do all those things. So don't wait, let's do it. We're here to help you. So if you have any questions about any of those things, you can always email me or connect with any of us via the Live at Gen Labs event series, and we can get you pointed in the right direction. So without further ado, put your hands together and please welcome Doug Redding.
Thank you, Brent, and thank you all for coming. The subject of tonight's talk is financial projections. Not the most exciting talk you'll probably hear in this room, but it's something that's very important if you really are seriously starting a business. Because if you don't know what your numbers look like, it may not make sense to start the business. So a little about me. I grew up in Los Angeles, lived there till I was in my early 30s, and then moved to Boston and had most of my career in Boston as a CPA and financial executive. I worked for Pricewaterhouse, which is a big accounting firm that's now called PwC after they merged with Coopers & Lybrand a while ago. From the early 80s to the early 2000s, I was a CFO in lots of early stage tech companies, mostly enterprise software. I was in a dot-bomb company in the late 90s, so I had that scar on my back. And then I was a partner in a venture capital firm that did early stage tech and healthcare, and that was a lot of fun. Really enjoyed that, working with some really smart people. And then when I left venture capital, I started a consulting practice, and my big client was Cleveland Clinic, and I helped with their healthcare IT commercialization. So the smart people that worked at the clinic invented applications that could be used throughout the health world, and I helped form companies around them or find other companies that could market them for them. That was also a very fun job. And then for the last 10 years or so, I've just been an advisor and part-time CFO for startups. So if you are starting a company, it's so important to understand the numbers. And the main thing is, how much do things cost? And the main cost is, for startups, salaries. And if you're a college student, you don't have to pay yourself very much. But as you grow and need to rent office space and hire people that need to have a real salary, you just have to understand how much those things cost. And you have to put them down in a spreadsheet and add them up and put the months out and see how much things are going to cost. The other thing that you really need to understand from financial projections is someday you're going to have to raise money. And so it's even more important to be able to use the projections to tell a story. So what are you going to sell? How are you going to sell it? How much does it cost to hire the salespeople and the marketing and all those kinds of things? So you have to be able to tell the story. And I'll go more deeply into that. And then, of course, there are the different phases that you have to go through. where you're building your product and then you're launching your product, and then as you grow, that's really when the money starts to hopefully roll in, but also certainly roll out. So let's talk briefly about the terminology, because different people use different words for different things, and this is something that I've developed over time, and if you use these words, everybody will understand you. So first off, projections are just a general term for looking at financials into the future. And within the overall topic of projections, the first thing that you really want to do is develop a financial plan that is your best guess of what your business is going to look like, typically over a 3-year time window. A lot of people will try to do 5. I just think that's a fool's errand, especially for a startup. You just can't see out that far. So try to focus on 3 years for your financial plan. Once you've got that done, and if you're trying to run your company with discipline, you'll probably want to have a budget. And that's typically just the first year of your financial plan. Sometimes it's called an operating plan. And every month, when you get your financial statements done, you compare them to your budget and see how you did. Did you spend too much? Did you bring in too little revenue? And that will allow you to make adjustments in real time. And then the last thing is what I call a forecast. And you can make up a forecast that shows anything. It doesn't have to be your best guess of what's going to happen. It could be, what if I do this? Then how does it look? What if I do that? How does it look? So we'll start with those words for terminology. All right, so the financial plan, pretty straightforward, 3 years, 36 months right across the screen. Don't try to insert annual totals. It gets too messy because you want to take your spreadsheet and just fill across. This is going to be on my gravestone. Don't let the precision exceed the accuracy. And I can't tell you how many times I've seen people with these massively complex financial models that are just guesses of what's going to happen in the future. So keep it simple. 20 or 30 rows on your spreadsheet and then 36 columns. And then I'll take you through some examples of spreadsheets that I've done for some of my clients over the years. Generally accepted accounting principles. If you can prepare your financial statements with GAAP, it will help communicate to potential investors that you know what you're doing. If you kind of make it up and these are my revenue items and these are my expense items, I think, but I don't know if that's an asset. So it's worth getting somebody that knows accounting to help you with that piece of it, unless you can do it yourself. And if you've taken an accounting class, that's probably enough. You probably can do a pretty good job just based on an introductory accounting class. All right, so the pieces of it have to have an income statement. That's revenues, expenses, and someday profit, but usually in the early days, loss. The second thing is a balance sheet. And I think it's important, but if it's a real early stage, simple business where you're not getting advance payments or buying inventory or building servers or stuff like that, you can probably get away without a balance sheet. And a cash flow, I'd skip that because I just think they're a pain in the ass. And as I said before, year one of your financial projections becomes the operating plan. Okay, so the revenue side of the income statement, that is really where you're telling your story and you're building your own understanding of how you're going to sell and market your product. And you need to list the kinds of things that you're going to do, and I'll show you a couple examples, to help yourself understand, but also potential investors understand how you're going to sell and market the product. The second one, I can't stress this enough. A lot of people will say, well, I can get 1% of this market, and so that's going to be my revenue projection. And that just doesn't hold any water, because there have been thousands or hundreds of thousands of companies that have failed because they didn't understand how to sell to every single customer. And you have to build your financial model from the bottom up. You know, how many people are you going to have to hire? How fast will they ramp in their knowledge of the product and their sales productivity? When you're doing online marketing, you know, you mail 100,000 emails. How many of them are going to get responses? You have to have some guess, and really it is a guess at the beginning, about how that's all going to go. And customer churn is a pretty big deal if you have SaaS-based revenue, or continuing, people are going to pay you every month or every year or whatever. On the expenses, what does it cost to deliver the revenues? And that's mostly the sales and marketing. What does it cost to pay? How much do you have to pay the sales guy? How many deals can they close in a particular month or year, depending on how big those deals are? All of that, you need some fairly detailed assumptions. I'll show you some examples of the expense side of an income statement, but I think that it's important to start with natural categories. So personnel expenses are things like salaries, bonuses, payroll taxes, benefits, those kinds of things. That's one category of expenses. Occupancy is another one. Rent, phones, utilities, snacks, whatever. And then, of course, marketing, travel. So group your expenses into the main buckets. Later, when you're building a company and you're hiring senior executives like a sales and marketing VP and an R&D VP, then you will want to give them their own budgets, which means you'll want to build your projections on a departmental basis. But I don't think anybody in this room is going to have that problem anytime soon, because that's a year 3, year 4 of a ongoing business. The most important thing is the detailed headcount plan, because in the early years, 90 or more % of everything that you're spending money on is people. The engineers that it takes to build the product, the marketers that sell the product, the customer service people that answer the phones, all those kinds of things. So build a detailed headcount plan, and I will show you some examples of that. And a chart of accounts is what we in accounting talk about, is just all of the categories of expenditure. And if you have enough detail, then it's real easy to both build your projections and then run your accounting and have the actuals and the projections able to compare to each other. All right, the balance sheet, I'll go over this fairly quickly because it's for early stage companies, it's not that critical, except for when your revenues and expenses don't tell the whole story. So for example, if you have to build inventory and you have to spend $100,000 to go out and buy stuff that you are later going to sell, then that's not going to show up on your income statement, at least if you do a GAAP basis income statement, because buying inventory is an asset and it doesn't hit your income statement until you actually sell it. So that's a sort of a subtle point, and if this is something that you don't understand, I wouldn't worry too much about it at this point. The most important thing is the revenues and expenses. Borrowing, it's very unusual for startups. Most of the money that's used to fund startups is in the form of equity, which means if they put money in, they own a piece of the business. This last piece, I will show you what I mean when we get to the balance sheet part of the projections models that I'm going to show you. All right, statement of cash flows. I think I'm going to skip this because it's just it's more trouble than it's worth. I have seen some investors that really want to see cash flow model for projections, but in my experience, they're the less sophisticated ones. All right. So financial projections for investors have to be credible. They have to be realistic. Some people say, I'm going to show you the worst case, the best case, and the middle case. I don't believe in that. Take your best shot and sell it and believe in it. It'll be a lot less work, and I think it gives you more credibility that way. All right, so I'm going to take you through some financial projections that I have used with my clients over the years. So this is a sample income statement, and it's really this short. It's what, 25 lines or 30 lines, and you have a few lines for the revenue and then a total. You have a few lines for cost of sales, and that's sort of an accounting concept that you can probably live without in the beginning. Cost of sales and operating expenses are very similar, but for a well-crafted financial projection for an investor, this is an important concept. When you're starting out, I think these 6 categories for expenses are fine. Personnel, marketing, R&D, if you're in engineering and you're building. Are these too small? Make it a little bigger here. These categories are all you'll need for your financial projections. And then, of course, you get to the net income. The balance sheet can be fairly simple. Things like cash and accounts receivable, fixed assets if you have to buy furniture for your office or computers for your staff. And then the liabilities, accounts payable, fairly straightforward. The revenue section is really where the rubber hits the road, and you really have to start with a blank sheet of paper. This is one that I did for a client that is in the healthcare business, and they are marketing a service to a bunch of different types of large health insurance companies. So in this particular model, we made assumptions about when a particular engagement would start, how many months it would last, and then there's a formula for the end of the month, and then a bunch of sort of complicated formulas that would calculate the revenues across the entire duration of the projection. And we had the large payer clients, medium payer clients, small payer clients. So you have to get creative with this. I'll show you one other example of the revenue model here. This is a company that is in the nursing home business, and they are delivering telemedicine to nursing homes. And so they have very specific assumptions about their staffing revenues. I'll make this one a little bigger too. And the cost of that. And then some of the assumptions on costs. And then this particular company had a bunch of different sheets to project their different types of revenue, and then it all comes together in the income statement. But I just wanted to give you a sense of there's no right way to do this except to be able to tell the story. How are things going to build from the bottom up? All right, let's go back to this other one. We'll look at the expenses. And this is where the expenses are grouped. Make this a little bigger too. So the first group is personal expenses, and you can see a few of the different types there. There's marketing. There can be a whole bunch of different types of marketing expenses. Operations, travel and entertainment, and then general administrative, and then it all comes up to a total at the bottom that carries back to the income statement. And then, as I said, the most important thing is some way of calculating your employee costs. And so I think the right way to do it is to list the names of the titles of the positions that you're going to want to fill over time. What month of the projection are they going to start? How much are you going to pay them? And then have some formula that calculates the monthly amount based on the start date and the salary. So it's as simple as that. That's about all I have. Any questions? I didn't think so. I didn't think there were going to be any questions tonight. All right. Well, thank you very much. And my contact information is in the presentation. I'll leave the presentation with Dustin. And so if anybody has any questions, you can get a hold of me.